on everything I love. If you just get a notebook, watch this video in its entirety, take notes, and really practice this, this is literally all you need to understand how the market moves. I understand that it can be intimidating. You can look at these candlesticks, see the green candles going up, red candles going down, and not know what the fuck is going on. But I promise you, just watch this video in its entirety, pause, go back, and repeat this, and everything will make sense. All right? Let's get into it. Market structure 101, right? Now, before I even show you guys any examples of anything, I want to explain to you how the market moves. The market has three ways of moving. Up, right? Down, right? And sideways. Now, let's lock in on this first example, the up, when the market wants to buy. Usually, when the market wants to buy, right, it doesn't just go straight up. It moves in patterns. It moves up, comes back down, moves higher, comes back down, moves higher, comes back down, etc., etc., until whenever it wants to stop. Now, these moves, right? This first line up is called a high. This is a high in the markets. This move down is called a low. But wait a minute. This low right here on a uptrend is higher than this low right here, the starting point. So this low is considered or called a higher low, right? Higher low. That is, in definition, a low that is higher than the previous low. So boom, this is a higher low, right? I'm actually going to just abbreviate it. I'm going to just say HL for higher low. I'm going to move this over here. This is what I'm going to do. HL. Let me write this down for you guys. HL equals higher low. Cool. Right? Now, watch this. The market went up, came down, created a higher low right here, but then came up higher than this previous high. If this high is higher than this previous high, this is a higher high. So, let me abbreviate that as well for you guys. HH, we'll call it higher high. Boom. So we have higher low, higher high. Let me just show you guys on this chart how it looks. This is a higher low. Boom. Come up here. Higher high. Boom. This is a low, right? But it's higher than the previous low, so higher low. So, guys, as you can see, right, the market came up, came down, created a low, came up, created a high. This high is higher than this high. So, boom, came back down again, created a low. But this low is bigger than this low. That is a higher low. This is a higher high. This is a higher low, and so on and so forth. Now, this is only for bullish trends, right? Bullish trends is buying markets. In other words, when the stock is going up, higher highs and higher lows are what is supposed to be being made. In a uptrend, uptrending markets, this is what you need to remember. Okay, remember this. Pause the video here. Go back. Study this. We're going to move on. Next topic. The market goes down, but it doesn't go straight down. What it does, similar to the bullish market, A downtrending market does this. Comes down, comes up, but never higher than the original point. Comes down again, comes up, comes down again, comes up, comes down again. Boom, boom, pow. Now, this is a selling market. Equals down trending market. This is when your stock is just dropping, right? Like, you know, the price of the US dollar during the pandemic, gold, etc., etc. Like whatever, you know what I'm saying? Whatever stock you invested in and it's just going down, you're losing money. This is what it's doing. It's creating a downtrending market. Now, as you can see, this is the original point of where the market started selling from, right? The market came down. This is known as a low. The market came up. However, you notice that this low never came higher than the original point. So what does this low be? What is this low called? A lower low. I mean, my bad. A lower high. My bad. Because this high did not reach above this high, right? So let me just rephrase that. Let me start over so you guys can understand and not get confused. This is the point of origin from where the stock fell. The stock came down here. The stock came up. It created a high. However, unlike the bullish market where the high that is created is higher than the previous high, in a selling market, the high that is created is always going to be lower than the point of origin. Write that down, right? Let me write it down for you. Bearish markets / selling markets create lower highs. Bearish markets / selling markets create lower highs, right? This is a high, but this high is lower than this high. The market came down. It created another low, but this low is lower than this low. So this is a lower low, right? So let me just mark it out for you guys as well too. LH equals lower high. Boom. And LL equals lower low, right? I hope you guys are following. I hope you guys are understanding so far. I'm trying my best. I'm usually really bad at explaining things, but this is something that I'm really passionate about. So please pause this video and go back and turn on captions, whatever you need to do. All right. So back to the diagram, right? Came down, point of origin, low. LL, right? Lower low. Came up. What is this? A lower high. Cool. Came down again. What is this? A lower low. Came up again, but this high came nowhere close to this high. It didn't break above. It didn't do this, right? It didn't come above that previous high. So this is another lower high. Cool. And we have the pattern continues, lower low. We have another lower high, etc., etc. Boom. So this is a downtrending market, right? Two types so far. Bullish, down selling. We have bullish, bearish, which is the selling market. And then we have the market that you do not want to trade, and I'll briefly touch upon it. Sideways markets. Sideways markets, aka consolidation. This is the market that you want to stay away from, because the market is literally doing this. It's not going anywhere. It's not going up. It's not creating higher highs, higher lows. It's not coming down. It's just going sideways. And the reason you want to stay away from this type of market, guys, let me draw it back for you. I don't know why it disappeared. The reason why you want to stay away from this type of market, guys, is because you're not going to make any money. You're going to enter up here thinking that it's going to go higher, and then it comes back down. You lose money. Then you try to sell because you think it's going to go lower. Then it goes back up thinking that, you know what I'm saying? So it fakes you out, and there's literally no trend. There's no trend, right? Going back to the selling market, the bearish market, the downtrending market, whatever you want to call it, there's a trend. It's a downtrend. So you can profit off of this. You can profit off of this because it's making a pattern, right? In a bullish market, there's a trend. It's an uptrend. It's making higher lows and higher highs. You can profit off of this. This, you cannot profit off of this. Think about this market. If you watch anime, right? It's a perfect example. If you watch anime, think of this as like Naruto, like Naruto versus Pain, right? A boss battle. Boom. Another example, Itachi versus Sasuke. Boom. Think of the consolidation markets as a filler episode. It's boring. You want to skip it. You don't want to mess around with it. It's boring, right? The other two markets are entertaining and you can make money off of them. Cool. Now that we got this out the way, right? Now that we got this out the way, I want to show you guys on the charts right now, real time, an example of a lower low, lower highs, an example of these markets that we just went over. So let me take off all these drawings, and I hope you guys understand what I'm saying so far. So, guys, do not be alarmed. Do not be intimidated by these, right? These are called candlesticks. I'm on TradingView, which is the platform that I use to mark up my charts and take trades off of. I just changed my candlesticks from red and green, right, to white and gray. That's all it is. But this is not important. I just want to go over market structure with you. So let's go to something that's simple that you guys can try to kind of digest pretty easily. Okay. All right. This can suffice. Let's go over here. What type of market is this? I'll give you guys 3 seconds. If you would have said a downtrending market, aka a selling market, you would have been correct, right? Now let me show you guys exactly how it's a downtrending market. First of all, just off the looking off of it, you can see that it's going down, right? Remember what I told you, the market never goes straight down like this. The market creates lower lows, lower highs, lower lows, lower highs, lower lows. Well, this is a higher low, right? Because it didn't come lower than this previous low, which is fine, right? But this is a lower high because this high is lower than this high. Lower high, lower low, because this low right here is lower than this low. Let me pause this. Let me pause this and restate everything that I just said. This is a downtrending market so far, because if we're looking at this as the point of origin, I'm not coming back here. I'm just cherry picking right now. Just follow along. Look at what's on the screen, guys. If this is the point of origin that we're looking at, the market came down, created a low. The market came back up, created a high, but this high was never higher than the point of origin. Remember I said that in the example. A downtrending market does not, it creates lower lows and lower highs, but the lower highs never go higher than the point of origin. This is the point of origin. Came down, lower low, came up, a lower high, came down, lower low. This is a lower low because this low is lower than this low, right? Cool. Market came up, it created a lower high. This high is lower than this high. Before this high, guys, right? This was the most recent high, and that's what you want to base your trend off of, the most recent high. Moving along, came down. Now this is not a lower low because price did not break beneath this low. It created a higher low because this low is higher than this low. Cool. Price came up, created a lower high because this high is lower than this high. Price came down, created a lower low because this low is lower than this low. Now, there's one thing I want to preface, guys. One thing I want to preface, and I'm going to write this down. Trends, they can do the opposite of what they're supposed to do during that trend. Like, no trend is ever perfect. You will never have, you'll almost, well, let me not say almost never, but it's frequently happening where you can have a downtrend go like this. Create a lower low, right? Higher high, lower low, and then come like it'll do shit like that. It'll make bullish price action in a downtrend, right? But I'm gonna explain to you guys as well as how we can distinguish a fake out, because that's all this is, right? This move up that broke above this high, this is a fake out because the price just went lower. Now I'm gonna explain to you guys how to spot a fake out. So look, right? In a trend, we know that we make lower lows, lower highs if this is a downtrending market, which it is, right? Let me take this off. I'm gonna explain to you guys why people thought that we were gonna buy here, right? So we came down lower low, lower high, higher low, but then a lower high. In a downtrend, the only way it's going to change on you is if we create a higher low and then a higher high. In other words, you need two confirmations. In order for the downtrend to flip and go bullish to an uptrend, you need to have both bullish confluences, which is the higher low and the higher high. This only gave you a higher low. If the candles came all the way up here, exceeding this lower high, that is your confirmation that we are changing trend. Does that make sense? So let me write that down for you. In a down trending market, you can spot a reversal when a higher, oh wow, why didn't tell me that I was typing off the screen? When, why did I spell went? When a higher low is created, no, when a higher low and a higher high is created. So in a downtrending market, you can spot a reversal when a higher low and a higher high is created. In a downtrending market, this entire thing is a downtrending market. In this type of market, a reversal is likely to happen when you have a higher low followed by a higher high. This was a fake reversal because we only had a higher low. We did not have the higher high. So price came down. People noticed that we reversed off this point right here, this level right here. And they're like, okay, wait a minute. We didn't break this low. We didn't go lower than this. So we're anticipating a trend change. Wrong. You need to wait for this to get broken. This is your previous lower high. And the reversal only happens once that is broken. So yeah, guys. So boom. Right. Let's moving on. Right. Came up. Wait, let me just take this off. Let me delete this because this looks nasty. Right. We came up. Lower high again. Lower low. Lower high. This is a lower low. Lower low. But then look, what do we have? What do we have? A higher high. What? Why did this high go above this high? I don't know. But we're still in a downtrending market, because if we have a higher high but no higher low, that's still a downtrend. If we have a lower, if we have a lower low, right, and a higher high. Wait, matter of fact, let me not say that because I don't want to confuse you guys. Just know, right, going back to what I told you guys up here, a downtrending market, overall, it creates lower lows and lower highs. But sometimes you can find instances where it creates a higher low, like it did here, and then a lower high, and then it continues the downtrend. But then another instance, it'll create a higher high, but then a lower low, and continue down the downtrend. You see what I'm getting at? So you can have that. The market, guys, I don't want you guys to try to predict anything. The market is unpredictable. As you can see, your job as a trader is to adapt to what is happening right then and there. And how you adapt to what is happening right then and there is by writing your rules. And your rule is, in a downtrending market, you need to have lower lows and lower highs. If a reversal is going to happen, you'll have both a higher high and a higher low happen in a downtrend. It'll flip the bias right then and there. And I hope that this makes sense to you guys, right? I hope that this makes sense to you guys. So let me move on to another example. But I'll also copy this so I can move on, right? So let's go to another example. I'm going to go to another selling example so that you guys can see something that is pretty simple. And I'm cherry picking because I want it to click. I don't want you guys to be confused or anything. Okay. I can get jiggy with this. Oh, shoot. What the hell just happened? That was not supposed to happen. Right here. I think I was right here. Boom. All right. Another downtrending market example. Look, this is cherry textbook downtrend. Look, came down. This is the point of origin. Lower low, lower high. Higher low. Remember, but it's not a reversal yet until we get that break of this high. We didn't get that break. We created a lower high, lower low. Lower high, lower low, lower high, come down again, lower low. Does it make sense now? You see, the market on the downtrend does stuff like this, lower lows, lower highs, and I'll even write it out for you. Look, I'll even show you. I'll type it out for you. Look, lower low. Lower high. Unfortunately, this is a higher low. Do not get confused. We're still in a downtrend, although we're making this part of a bullish market, right? Lower high. Boom. Lower low. lower high, lower low. Boom. So this is a downtrending market. And guys, listen. Please, 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 please. Like I said, do not get intimidated by these charts. The charts mean literally nothing. I know your first time opening TradingView or whatever charting platform you use, it looks like the cockpit of a fucking airplane. It's confusing as hell. But once you just narrow it down to what you need to be focusing on, and what you need to be focusing on is the trend. The trend is your friend. Remember that. The trend is your friend. That's all you need to know. The color of the candlesticks don't matter. Nothing matters. This literally is how the world revolves around stocks. Candlesticks, which is what you're looking at right now, makes stocks, makes futures, makes options, makes everything. Anything that you can invest in, financially speaking, has candlesticks and has a trend. Let me look at Bitcoin. Let's look at Bitcoin, right? Just for shits and giggles. Bitcoin. Look at Bitcoin. Let's take a look at Bitcoin. Everything has a trend. Look, this is the Bitcoin. The Bitcoin price right now is at 67,000. 67,000. We are on the hourly time frame. Let's go to the daily time frame. Any time frame you go on, guys, will have a trend. Look, we're on the daily time frame right now currently. What are we in? A downtrend for Bitcoin. Bitcoin is losing money. I mean, Bitcoin is losing money. Bitcoin is in a downtrend right now. We're in a downtrend, right? I know you have some people that probably want to invest in Amazon. Let's see Amazon. No, let's look at Tesla. People invest in Tesla. I know I have friends that invest in Tesla. What are we in? A downtrend for Tesla. It looks a little choppy because this is a stock. But as you can see, point of origin, lower low, lower high, lower low, lower high, lower low, lower high. We're literally on our way down to make another lower low. Literally, right? Everything that you guys invest in has a trend. And that's what I'm trying to show you right now. The trend is literally your friend. But listen, guys, that is it for tonight. I don't want to confuse you guys. I'm only going to focus on the selling example right now. Tomorrow or later on, I'll do a buying example. Like I'll show you live bullish market structure. I just want you guys to understand piece by piece so that we can put everything together in the end, and then we all make money together. Simple, right? So, also one more thing too. Where my mouse is right now, these are called time frames, right? And remember I told you guys that these are called the candlesticks, right? So I'm on the daily time frame right now. Every bar that you see represents 1 day of price action, right? So we had a day where it was selling, we had a day where it was buying, a day where it was selling, a day where it was selling again, a day where it bought, etc., etc. We go down to the 4-hour time frame, same thing. These candlesticks represent the hourly, the time that you're on the time frame. So every candlestick that you see here is 4 hours of price action. On the 1 hour time frame, same thing, 1 hour of price action. It just, however you view the chart, it's how you view the chart. But I'm not gonna get into that right now. I just want you guys to understand downtrends for this episode, and then we'll move on to uptrends for next episode, and then we can, answer any questions from there. But yeah, see you guys in the next one. Peace.